Hey guys, good afternoon, and hopefully you had a really good weekend. And should be probably Sunday late afternoon or early evening for some of you. So I'm going to go ahead and record this for anybody that misses it. But I just want to take some time and just kind of go through where we're at from an overall market perspective. So I've been getting a lot of questions lately as to, well, directionally, where are we going? And you guys have read some of my LinkedIn posts, so you can kind of see, what are some of the headwinds that are within the economy that might allow us to struggle? So I want to be respectful of everybody's time. But what I'm going to do is I just want to go ahead and run through a couple things just so that I'm fully compliant with the disclaimer. But all of this tonight is just purely educational purposes only. Any materials, information contained herein is just for general use. So I don't want anybody to misconstrue this as this is meant to be investment advice, tax advice, legal advice, or anything along those lines. Really just an opportunity for you to learn and to kind of see from a technical perspective different ways to look at the market. So anything that we talk about with buy sell signals or areas of interest, I don't trade anybody else's funds, but I do give my perspective on the market and share my thoughts and perspectives, and hopefully you find it somewhat intriguing. Neither me, any of the employees, subsidiaries are financial advisors. So I'm not a licensed financial advisor. Don't pretend to be one. Don't want to be one. And anything that's on my website, social media posts are just, again, purely informational. So take it for what it's worth. And then any information that you use, it's at your own risk, no different than me, right? So I'll make assumptions on the market. I will use technical analysis. But I also recognize that any money that I put to work is 100% at risk. Now, as many of you who have come to know me, we will always lead with risk management. That is always the number one thing that is most important when you're investing, right? You have capital, but then you also will have risk management protocols in place that will protect you from either making a bad decision or the wrong decision, or if the market goes in an opposite direction than where you thought it was going to go. And then everything in this presentation are just mine. So they have nothing to reflect on the views of my employer, their perspective, or anything along those lines. So I just want to make sure that we get that out of the way. Purely informational. Hopefully you'll learn something from it and you'll be able to take something and then apply it to your own investing or thought process strategy. So with it, one of the things that I want to do is make sure, so some of you have taken my course and you've spent 12 hours with me, so we've gone into a lot of this in detail. But for those of you who have not, I want to just talk through some of the terms that I'm going to use tonight. So one would be a market maker versus a retail trader. So what moves the markets, for the most part, 90 to 95% are market makers, right? They're your hedge funds, they're your investment funds, or your 401ks. They're your big investment houses that actually are buying blocks of stock or selling blocks of stock that are typically at predetermined levels, right? The portfolio manager typically doesn't wake up one morning and just say, well, we're getting out of this position, so therefore sell everything, unless it's maybe a really bad earnings release or really bad guidance, or the performance of the stock is dramatically down. And then you have your retail traders. So individuals like myself that trade market momentum. So I, as well as most retail traders, we don't trade against the market makers. You trade with them, right? So if they're the ones who are moving the market, you want to follow the smart money. You don't want to go against it. You want to trade with it, okay? We're going to look at different time intervals. So we'll look at weekly, daily, hourly, different minutes. So that's typically how you would decide whether you're going to get in or get out of a trade or stay within one. We're going to talk about supply. So these are areas of high concentration of sellers. So where are the sellers sitting on a stock compared to where is demand, or where are the buyers sitting at a high level of concentration? We'll look at some pivot points. So this is a directional change of a stock where maybe it was trending up and now it starts to trend down, or it was trending down and now it's directionally moving up. We'll also look at a couple of gaps. So this is where the closing price did not overlap the opening price the next morning. And we do know statistically that gaps will fill 80 to 90% of the time. So a gap will act as a magnet for price to draw itself to. We'll also talk about volume. So these are number of shares traded during a specific point in time. So the number of shares that are traded within a 4-hour time frame, or a 5-minute time frame, or a 1-minute time frame. And then I'll also reference price action. So how a stock responds at a certain price level. So there is no guarantee that a stock is going to stop and go up at a certain price, or it's going to stop and go down at an alternate price, right? So what we will typically do is we will look at price levels, areas of interest where the market will make a determination as to, do I continue this uptrend or do we continue a downtrend? And some of the other terminology that I'll use is an EMA, which is an exponential moving average, where how has the stock been moving over time? So whether it was a 9-day or a 21-day, technically, moving averages will confirm a downtrend or an uptrend in price. And I'll also reference VWAP, which is the volume weighted average price. So how much are buyers and sellers paying above or below a specific price based on volume? So there are some days where volume is very, very strong, right? And then there's other days like around the holidays or holiday weeks where there really isn't any volume because everybody's on vacation or they're on holiday, and you'll see very wide price movements. And that's because people are buying and selling, but there's not enough shares. So if there's only, for example, 10 of us and we all own a stock at $20 and 8 of us decide not to sell it, but 2 people decide to sell it for half of what the rest of our value is, the stock's going to move down. So, but there's not a lot of volume to support the price, but the price will move. And I'll also talk about Fibonacci retracement level. So these are just some areas, again, of interest where a stock has retraced a drop or has bounced from a rally to the top. And we'll look at from high to low, and then we'll also look at a couple from low to high. So with that, I'm going to go ahead and I'm just going to move right into a couple of the market charts. And the 2 prevalent ones that I would say most traders trade are the SPY, which is the S&P 500 index. And then the other one is going to be the triple Qs, which is your NASDAQ 100, which is your Google, Apple, Microsoft, Meta, all your large cap tech stocks. So this is a 1-day chart in actually looking at where the S&P has been. And you can see back down here on the left that this was October of 2022. And since then, we have directionally moved in an upward direction. You could even take, if you wanted to, from the low going upwards. And we want to make sure that when we look at a trend line, okay, where do we have several touch points? So you can see that we were in confluence here above and below the trend line, but here we bounced, we bounced, and then we broke trend. So I know about a week ago, I did a post that would say, well, when might be a good time to exit a stock? Well, one theory is once it breaks trend. Why? Because you're not moving still in this upward momentum. So when this trend line broke in SPY, could have been an opportunity for you to think to yourself, is it time maybe to get out? One of the other components that we could look at is, well, where is there support within the actual stock itself or the index? And this would typically be where you would see pivots. So where you went from a high down to a low. This would be a support level that the market found where it moved up. Here we moved up again, came down, found another support level. We moved up. Here now we are literally in consolidation. So this is just kind of a consolidation phase, and I'm going to change these colors and we'll make them blue so that you could kind of see that this was in a range. And what that does is that makes it definitely a little bit harder to trade within because you're in such a defined market. Typically, what traders like to see is you want to see a break out of the range or you want to see a break below the range. And then where would we have additional support? Well, we had support here, but you can also see that we have now broken that. So for a period of time, this was a support level. It moved up, broke the trend. We held it for several days, and then we broke below it, and then back above, and now we're below again. So where likely is SPY going to move to? A couple things with, stocks and markets in the indexes that you'll see is that they also somewhat respect intervals, right? Of 405, 410, 415, 420. We are yet now at again where you can see right here where we have been bouncing off of this support level. Now on Friday, we actually closed just below it. So this is considered wicks, and there's more story to this than I'll be able to share tonight, but you can see that we kind of started to break the trend here. So concerning wise as to, well, where is the market at? If it's going to keep falling because we're no longer in an upward trend, we would need to reverse here to move back up, or we're probably going to drop back down till we find more support at the next level. Well, the next level is right around 415. Below that, it's going to be at 406. Now, can you stop somewhere in between here and move back up? Absolutely. But this is also kind of where that guessing game is. Because if you look here, you easily have probably 20 days where we were just in this defined range, kind of bouncing around. And that's what the market really needs in order to find stability. So just note, we were in uptrend, we broke the trend, we tried to move back up, we have now failed it, and we are now sitting back here at support right around that 420 level. So it'll be interesting to see how things play out this week within the global markets, as well as within our own economy. One of the things that has been leading the market lower, unequivocally, have been the bank stocks. They really got hammered last week. Most of the bank stocks were down anywhere from 8 to 15%. Well, what does that signal? That signals a weakening economy. That signals that the 10-year treasury is moving to 16-year highs. Mortgage rates are now above 8%. Could they be on their way to 9%? We'll see what happens. But when rates are that high, as is consumer debt, something has to give. You just can't keep going directionally on that path, thinking that the stock market is going to move up. I mean, you have more negative confluence than you have positive. So let's take a look at the triple Qs. So these are your big cap stocks. So this is your Apple, Google, Microsoft, everything rolled in from an index perspective, and just kind of look at how we have been respecting this trend line. So we had some resistance here where we couldn't get above it for several days. And then once we did, we found it as support, moved up to a new high, and then we came down and it held support, moved up, and then we've been holding support. We are right back to that support line yet again. So if it breaks 354, where are we most likely going to go down to? Well, again, look at where your pivot was, where we were coming down and we found support. So we're at 350. Where was your next strong signal? Well, we were at 340. If we go down where we again found support, we're at about 331. So could it bounce somewhere in between here and move back up? Absolutely. But again, the market likes 330, 340, 345, 350. My guess, if I had to take a best guess, is this is probably going to struggle here for a while. And then depending upon what the FOMC does going into year end, do we raise rates again? Do we hold rates where they're at? If they raise again, it's going to put more pressure on the markets because borrowing is just more expensive. Let's do the exact same thing. Let's just, if we were going to take a trend line on this and see where we were. So we had a touch point here. We were then going parabolic for a while, came back, touched the trend, and then we broke trend. And then yet we are bouncing back here at a support level. There's some indicators that we can look at from a supply and demand that will color code. And you can pretty much see that everywhere where I drew support, the computer model will agree with me that these were support levels. So while technology is really nice to have and it makes it a lot easier while you're trading, you could also do this with a naked eye. So it's not like it's a secret what I'm showing you, but it does confirm that where I said there was support, the computer models will say, yeah, there were buyers here. We could go back and look at the exact same thing on SPY. And did everything line up from where we were at? We'll give it a second to go ahead and load. And there we go. So we have a lot of support right here. We're deep into support. Here we had another heavy support level, heavy support levels. And they're layered because these are all different times. So these are 1 day support. They are 4-hour support. They're 1 hour, and so on and so forth. So if we were to just go ahead and take a look at this on a lower time frame, and I'm going to turn this off, you could see that at the lower time frames, did it respect the daily support levels? And for the most part, it has. It's really stuck. But if we drop, you can see that there really is no support until we come down another 5 points. And then again, we had this chop zone here with the bottom of it where it was actually able over several 4-hour time periods to regain it. Okay, so that's kind of how you want to think about supply and demand. So the supply is where all the sellers are. That's where the red is. And there's been a lot of red up here. The buyers disappeared. Well, where are the buyers now? The buyers are now at these lower levels. But you'll also note that the buyers are at very low intervals, 30-minute and 45 minutes, meaning they can get bought up really quick. And then you'll start to get into heavier support down here, which is clearly lower. The black zones are where it kind of will free fall, or it will break down to the next level of support. And then when we trade on a daily basis, the exact same thing happens. You can see that even on my daily, when I'm on an hourly basis or a 15-minute basis, it still respects that same resistance or support levels. So even though there's buyers here, the sellers are actually just heavier. So I'll stop there. And if you guys want, you have the chat that you can type in. Feel free to ask any questions or throw a stock in here that you want me to look at. I really don't know what you're going to pick, but I'm happy to look at anything that you might want to talk about. Discover, Sean. So what is that? So here's the problem with Discover. I don't know the ticker off the top of my head. Discover Financial. So this one is kind of a train wreck, right? And so we're looking at it on a 15-minute. Let's look at it on a 1 day. This is actually a no touch across the board, right? So you could see that it was, hovering up here in this nice band for a period of time. Let's do this. Whoop. I apologize for that. Let's go ahead and mark that right here. So you can see back here in April, we hit a high in May. Then we came back up here and we retested it in February. And then we retested it in July. And then now look what's happened ever since. So a couple of things. One, you could see with Discover that there was support right here in this range. Okay. So how do I know that there was support here? Well, let's make this, I'm going to make this red just so you could see it from a different color perspective. Here we go. You could see that it held multiple times, right? And now we've started to chop, and now we've clearly broken down. So where was there another level of support? Well, it was back here in January of 2021. So that was a couple of years ago. And you can see we are literally bouncing right off this trend line. So if we lose this, where's it going to next? Probably about $10 lower. Now, could it stop somewhere within here and move up? Absolutely. But what you have is you have executive turnover, you have executive resignations, you have increased credit costs that are moving up significantly because of the market. So from my perspective, John, this would be a no touch, right? I would never buy this or say, well, I think it's a good buy and it's going to move back upwards, right? Um, just there's just too much noise. And that's what the one thing you guys all have to be very cognizant of, right? When there's a lot of noise in a stock, investors don't want to hear the story. They're going to sell first and ask questions later. And that's what's been happening to the financials and the banks. I mean, they've just been getting hammered. And then if you have bad news that's unique to one institution, they all sell. And it's everybody just running for the door simultaneously. So this one's in a really challenging position right now. I would say, again, it's at the support level. Let's see if it can hold about $82, but that goes back to 2021. And then the next level of support is going to be probably down here between 78 to 72. You can see, let's look at this. I mean, we're on a 1 day. Let's just zoom in a little bit here so you can see this. It's kind of for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. It was bouncing around. And then it found support, came here, found support. But if we break this, we're not finding support till about $78. And then if we break this, we're probably not finding support till about $73. And that's quite a drop if you think about it from where it was. And this is not unique, and I'm not picking on Discover, but this is what happens when you have financial turmoil within the markets. Usually the financials get hit first and pretty hard. Does that make sense? Okay, McDonald's. Let's look at McDonald's. So McDonald's is another news story, right? I mean, it was just on a really good rip-roaring trend. So let's just go here. And we were on a really nice trend line until about August. And then it literally broke trend. So we could see, well, where was there a lot of support in the past for McDonald's? Well, it was right here where it pivoted down and then moved back upwards. Let's make this blue, make that light blue, right? So there was a real heavy support level down here, right? I mean, you could see that where this was touching multiple times. Support, 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 moved up nice and aggressively, came down, touched, and then we were bouncing here. And then once we failed back to the next line to the 260. So you went from a nice high. And this is what you also have to watch too, right? So this is consolidation, but you have multiple days where it's 1, 2, 3, 4, 5, 6. I mean, this is weeks of time, right? So this is from May 2nd all the way through July. I mean, this is really a very large consolidation phase. And then eventually, if it can't break above it to the next level, it breaks down. Why? Because the buyers get exhausted and there's no more new money fueling in the stock. And then what happened as of recently? Ozempic. So Walmart came out with an article that said their customers that are getting Ozempic prescriptions filled within the pharmacy are no longer buying junk food. They are no longer buying alcohol. They aren't buying chips, sodas, junk food. So therefore, Anheuser-Busch sold off, Pepsi sold off, fast food restaurants sold off, right? Now, look what happened. You have to remember, support eventually turns to resistance, right? So what did it do? It broke through support, came down, and then it's now back up to the 260. So we dropped as low as 245, and now we've moved up. So the question is can it break above resistance? Well, let's just throw a Fibonacci level on here real quick, and I'm going to clean these charts up for you just so you can see. So a Fibonacci is a retracement from a high to a low to say, well, if this is going to reject, where would be a good reject point be other than a strong pivot? So right now we know that we have a strong pivot right here because again, this was support, so it will become resistance. If it can break through here, the next level will most likely be the 50% retracement from the drop from the high to the low. So 272.49 is where I would consider getting short the stock again, right? Unless you are going to struggle at this level and then it's going to break lower. So we always look left, right? Looking left tells us where there were really big support levels in the past. So again, when we're going from a drop back to a high, where are we finding it? So it pivoted right here back up. Ironically, it pivoted at the exact same dollar amount. So are we going to just hover within this channel, or are we going to break above to the 50% retracement of the Fibonacci and then fail? Or are we going to come back down and test the trend line and then fail lower to 234? So it's always helpful that when you're charting stocks, you always start on the daily, right? Your daily is your best indicator. Then when you're trading intraday or you're trading during the market, you want to go to your lower time frames, right? So we would look at a 4-hour time frame. I'm going to go ahead and, if we can, get rid of this Fibonacci. Whoop, did not want to do that. Let me get rid of this. Let me go ahead and remove this because we're nowhere near the 50% retracement, right? But when we look at this on a 4-hour time frame, yeah, there's not really anything to support this from moving back down. We would really need to reclaim this 260.19 level to move back to the upside. Well, let's go ahead and just turn on the supply and demand, and let's see where supply and demand is. Well, exactly kind of what I indicated. So let me make this a little bit bigger for you. You can see that what's going to happen here is, if you fail this, because there's not a lot of green buyers here on the higher time frames, they're 45 and 30 minutes, you're going to probably break down to here to your next level of support, which is where your consolidation took place. And then if it doesn't hold, then your 245 is going to be your next level of strength. Remember kind of what I said, that the market likes 245, 250, 260. It's the exact same thing. So the support level right here is about 250.84, where this candle opened and then started to move up. So we can go ahead and we can flag the bottom of this candle on the 4-hour. And then we can go ahead and turn off our indicators. So if I was going to trade this stock intraday, or while the market was open, this is what I would be watching. I would be watching between those candles. I would also be watching what is the volume going to do, or the price action at these different intervals. Well, you can see over the last several 4-hour increments, volume has been increasing, but it's been increasing on your red candles, meaning you're having more selling pressure than buying pressure. So we'll want to watch and see, as we get to the line, do the green buyers step in and push it back up? Or does the red, the actual bears, take over and push it back down to 250? So those would be just kind of a couple price levels that I'd be watching across the board. Other stocks you want to take a look at, just type them in chat and I can pull it up for you. Remove these. Let's take a look at Apple. So this is, again, a market leader. So as Apple goes, kind of the market goes, right? Because it's in everyone's 401k. It's in everyone's pension. It's in every single mutual fund. I mean, every fund manager owns Apple. Well, let's look and see, where did we have resistance on Apple? Well, clearly we did up here at 196, right? We had resistance here at 189. It pushed down. We had resistance here at 182. So I would not be getting bullish Apple until you could get back above with strength where the seller stepped in and pushed it down. Well, where are the buyers? Well, let's take a look and see where the next level of buyers are. Well, there's some here at 169. We'll make that green, right? Which is, we're at 172 now. So there's probably some good buying strength here. If you go to the left, you'll also see that there were a lot of buyers back here. And so when I say we trade in a range, 169.98 to 170.91 is not that huge of a range, which is why sometimes what we'll do is we'll just say, well, I'm going to create a zone and I want to pay attention to the zone of the buyers, right? And just watch how price reacts. Now, if we break this zone, the next level of strength for a zone is down here at 165. again, it's no secret. I mean, it's 165, 170, 175. The market likes $5 increments, no matter how you look at it. You know, we got another zone here, and then we'll go in another zone here. So this is kind of how I would look as if I was going to play Apple. I don't know that I would short it at 172 going into 170. But if you were to break 170 or 169, you could short it going to 165, right? Which is why we do options and we don't short the actual stock, because we could define our risk. And if I was going to bounce Apple, where might it bounce? Probably about 170, right? Because that's where it has found support, more support, a lot of support, ton of support here. But you're not finding support within the channel. So you're going to probably want to wait, if you were going to buy Apple, for it to come down to 170, hold price with confirmation, and start to move back up. So let's say, okay, if we're going to do a Fibonacci retracement, where's 50% of the drop from the last pivot? Well, we're not done dropping. So all we can do is we can take this pivot high where the stock pivoted, and we're going to go to the candle low. So if you did that and you were in Apple and you were buying here, this is your golden zone between 50 and 618. And what did it do? It failed the 618. So you would have gotten short Apple here, and you would have stayed short unless you broke above it, right? And that's how we can use different tools like Fibonacci's to say, well, is it time to get short a stock? So the stock dropped from 190 all the way down to 167. It recovered 61.8%, which is, again, this is your golden zone where you're looking for a reject. Were you going to reject the 50? We did not. We tried to, but then it pushed above, and then we ultimately rejected the 618. So let's go ahead and look at this. If we were going to do it on a 5-minute chart, when did it reject? Well, it literally rejected on the morning of October 13th. Here we found support, and it looked like it could have gone back up. So I would not have shorted it here until you broke below. We did break below, so this would have been a good short for the day. It pushed up. These are overnight hours, so this is after hours in the blue. This is pre-market in the brownish. And then what did we do again? We failed it again. So this would have been 2 great days in a row that you could have shorted Apple, right? So, I mean, literally, your trend line is straight down. Your trend line is straight down. And if you note, these are parallel to one another, right? The market just doesn't move on accident. It moves in geometric shapes. So that's what you want to be cognizant of, right? Is that I see a trend. Then all you're doing is looking for another trend, or you're looking for a repeat of a trend. We can go back again onto the dailies, and we can see exactly what it did. Whoop. Move it over here. But on a daily, again, I drew this on the 4-hour. It's not magical that even on the daily, it rejected the 618. I could draw this on any time frame, and that's how you're going to trade it, right? It's not like, oh, well, I got to go draw it on the daily. Then I got to draw it on the 45-minute. Then I got to draw it on the 15-minute or the 5-minute. No, draw it on the highest time frame. And then as you move to lower time frames, this is when you get into the trade or you get out of the trade. Aaron, I'm glad it's making sense, buddy. That's awesome. That's what I love to hear, right? Okay, Renata, you wanted to look at Amazon. So this is one we're going to be very cautious with. Why? Because they have earnings coming up right here. Earnings is going to be on October 26th. So if you want to play Amazon for earnings, what would be some of the things you would want to be cognizant of? Well, let's do this. We are clearly at an area of strong support, right? Look, I mean, so again, always look left. We had, and we're on the 4-hour, so I can even switch it to the daily if you want. You can see that on the daily, this range is kind of holding, right? So the question will become is, are we going to break to a new low? So where will there be further support on Amazon? Well, there's going to be some support here where we reversed at 123. I'm going to make that light blue if I could. We reversed here at 120. We reversed here at 115. We reversed here. This is kind of consolidation, but that's a small and then we clearly reversed here, right? But again, you're 110, 115, 120, 125. So when you're in between the odd numbers or the even numbers, depending upon how you're looking at it, you just want to be cognizant. But it's no surprise where I said that there was support here, and I was looking left. I wasn't even paying attention. Look at this candle. It literally touched support and then moved back up. It bounces off of it because it knows that this is where there were a lot of buyers in the past. This is where there was a lot of demand before it moved in an upward trajectory. So we're on a daily here. You can see that it's really kind of back to, this is almost like a double top, right? So this is where you would have wanted to have had another zone set to say, well, this was a high, so I'm going to cover this candle wick. And you could have literally set this as an alert in your system to say, if we get back up here to this level, I want to be cognizant of this because could it reject? And this was from August 17th of 2022. We're going to go fast forward an entire year. Do you think it just miraculously had rejected at the same exact price point? No, it's a computer. It knows where are stocks overbought, where are they oversold, and where were their previous sell points. So the market sold off here. It sold off here. Same exact thing. Couldn't get above it. Couldn't get above it. So what do? We broke down. Couldn't get above it. What do? Broke down. Can't get above it again. Breaks down. We're back to this same exact zone as we were before. So would I be going long Amazon? No. What will be a catalyst for this, Renata? Earnings, clearly, right? But if I was going to protect myself, couple things that I wouldn't get long until I can get back above this consolidation where we broke down. So I would want to see it go back above 133. That would be my target zone. I would want to see it get back above this area before I would say, okay, I feel good. Now, I personally don't ever play earnings because it's like roulette. It's black or red, right? You got two choices. Yeah, you could throw it on green. But you know, I think you guys know what I mean here. It could either break down significantly or it could move up exponentially. So if you're going to ever play this for a bounce to the upside, well, where am I playing it to? Well, I'm going to do a Fibonacci from a high to a low. Well, ironically, it already hit the Fibonacci. So if you had this out here where it already started to pivot, you would have known to have gotten short Amazon right here at 134.43. This candle was at, the high was 134.48. So, I mean, you pretty much just touched the zone. Let's go onto a 5-minute with this and see what it did. Just for fun. Here's our day where we touched it. And let me make sure I'm not drawing any more fibs. I know it's hard to see because these are so small. But look at where I had this Fibonacci. And if you had it, you would have seen you could never break above it. So you would have never gone long Amazon. But when you failed it on this day, this was on October 12th, when you saw that it touched, can't break it. They try it again, and then they just give up, right? So from 134 to 129 in a single day, that would have been a 100% move in the options contract price, easily. And then look at the precipitous sell-off. I mean, it just sold off hard, right? And then you start to try to say, can we find new support? And it didn't. And it just kept trending down from that point forward. So that's how we can use Fibonacci retracement levels to just mark our charts. And then you just sit and be patient, right? There's no sense in saying, well, I got to find a setup. You wait for the setups to come to you. We have our daily support. We have our daily resistance. Let's go ahead and throw on the indicator. And again, it pretty much highlights where I believe that there is going to be support in the stock. We also know that we have a couple of gaps. So let's look at those. Remove drawings. We have a gap above that would act as a magnet. We have a lot of black space here. So if you're going to short Amazon, as soon as it drops below 124.28, you have room to about 121. this would be a good short scenario because there's no buyers sitting in here. Now, are there buyers probably sitting at a lower time frame? Possibly, but they're not going to be that strong because they're all 30-minute, 45-minute. You got a couple hours. But when you want to look at where the strength of the buyers are from support and resistance, stay on your higher time frames, especially when you're on your dailies. And if you have a very powerful trending day down, it's going to blow through all the buyers and knock them out to go to this next level of support. Does that help, Renata? How you might want to look at this? Yeah, you're very welcome. Good. Any other stocks that you guys want me to look at tonight? I don't want to take up too much of your time. It's your Sunday evening. It's time to spend with friends and family and get ready for Monday morning. But I just thought I'd do this because it might be kind of helpful for you to think about, directionally, where is the market going, or what might be some things that I would want to consider. Well, for me, if the market doesn't hold in the Qs, this 354, I think we're going to 350, then I think we're definitely dropping further from there. So we'll watch how this week plays out. Can we hold the 354, and can the bulls start to reclaim this and push us back up into some resistance and find some stability? But right now we're kind of at a pivot point market-wise where directionally it looks like it wants to head down before it wants to bounce here and move up. And again, what's the primary driver, in all honesty? Is going to be your 10-year treasury. If that 10-year treasury gets to 5.25, 5.5, this is definitely going lower. Why? Because borrowing costs for companies are going up. And that's the one thing that hurts margins, as well as the US dollar. So the higher the US dollar goes, the more expensive it is for people around the world to buy goods and services that are exported by US manufacturers like Nike, or companies like Yum Brands that owns KFC and Taco Bell that are in Europe, or Starbucks. $1 of Starbucks in, German currency or Italian currency or Greek currency doesn't go as far. So therefore it erodes the overall earnings. So good. Anything else before we go ahead and call it a night and get you guys back to your families? Okay, good. Well, I hope this was beneficial. Gives you just a different way to think and learn about the markets. And with that, I wish all of you a fantastic Sunday evening. And I just appreciate the following and the support and everything else that you guys do to advocate for further education around financial awareness. I think it's the one thing that's severely lacking that more people can use. So with that, never hesitate to reach out and let me know how I can help. And I will talk to you guys soon. Take care.